I'll change my mind and I'll come on your show and admit that I changed my mind. When Larry Fink and BlackRock announces that they're no longer taking their payments in cash, but everything they're taking it in Bitcoin, including this 40 million or 80 million, whatever he's getting a year, that he's decided to take it all in Bitcoin. When he does that, I'll rethink my Bitcoin. Until that time, I'll stick with my thought. I wouldn't run out. I feel more comfortable in the mining sector right now, but I wouldn't be against holding anything that was oil related. I think natural gas has more of a challenge, quite frankly. But oil, I think I would own an oil stock before I'd own a technology stock right now. Focus should be, if you are going to be bullish, is continuing to be overweighted in the producers and the people that own the physical product. And the pure expiration ones have to be the smaller part of the portfolio. And people have it reversed. They've loaded up on the most highest speculative ones, and they have very little of the physical or the producer ones.
Hey guys, welcome to Capital Cosm. Today I have a special returning guest in the form of Peter Grandich. Peter, thank you so much for coming back on the show.
Most enjoyed our first one, and I suspect I'm going to enjoy this one too.
Likewise, Peter. As always, nothing in this video is financial advice. Neither Peter nor I are financial advisors, so please do your own due diligence. Peter, let's just dive right into it. What is your overall view of the markets right now?
So on January 1st, as I entered my 40th year in and around the financial arena, I said it was time to build an arc. I really believe that there were multiple factors, but five particular ones that really concerned me, that within 3 to 5 years or less, the United States was going to be in the midst of its absolute worst ever social, political, and economic environment. I'll just give you the five. If you want to go into any of them, that's fine. The first and foremost, everybody's talked about it. It's now so pronounced that even Wall Street titans are talking about it, and that's the runaway debt. We just can't keep adding trillions of dollars into debt because we're getting to the point where servicing the interest rate based on known expectations of income for the government is going to be pushed and strained. That's just not feasible at the rate it's growing, and it's growing exponentially now. It's not slowing down, it's increasing. The second is a retirement and aging crisis. It's a combination of both. 65% of Americans are working paycheck to paycheck. It's going to be a disaster for a lot of people. They're not going to reach those golden dreams of those commercials that we see that the financial services firm opens. What was number three on January is pushing number one at the moment, and that's an immigration invasion. But it's really an economic invasion. It is going to hurt us far more economically than anything else. Yes, there'll be social and political ramifications. And now, because it's so widespread and it's impacting the average population, it's finally getting recognized as a potential real problem, and it's probably going to be one of the buttons for the upcoming election. The fourth is what Wall Street refuses, Main Street Wall Street, to recognize as even a reasonable something to be concerned about. And I think they're going to learn one of their worst lessons in their history, and that is the formation of the BRIC nations and what that's going to mean to world trade in the coming years, to the point that I think it will be as much to world trade of what BRICS became as the Industrial Revolution came for world trade. And then the fifth one is the one we would hope could be fixed, because it could then fix the other four, but it's the most broken of them all, and that's political paralysis. Not only can the two parties not get in a room with each other and do anything worthwhile, but now they have factions within each of their own party that want to break away from the middle of each party. And these are the people that are going to supposedly come together, I guess, after they count the money they made in the markets, because they all seem to have a better way of making money in the markets than I do. In fact, I wrote to Pelosi to see if she would take over my investment portfolio, but I haven't heard back from her yet. But that would be the area we would go to in this dire time, and it's worse off than the other. So it's for my business. There's a planning business that I'm involved in here. Most people don't want to hear this. Even the people that might be hard asset oriented, it's a very tough sled that I see coming. And I understand why a lot of people don't want to hear it. But what I hear from a lot of good friends is, Pete, I know you're right, but I'm praying you're wrong.
Yeah, I mean, that sounds very somber, Peter. Rightfully so as well. Just recently, there was a comment by let's say a peer of yours by the name of Larry Fink. I don't know if you know him, maybe the CEO of BlackRock, someone like that. But he recently said that gold, which is kind of like your crisis hedge, your inflationary hedge, some might call it, a tool that we can use in times like these. He said, and I quote, that gold is a danger to the capital markets. Do you want to comment on that, Peter?
Well, I literally before we started this interview, I posted it on my Twitter page. And I think I actually said I could almost curse. I'm that angry. It is preposterous in the umpteenth degree, but not surprising. First of all, I like to joke, but it's only a half joke that my mother said when I was a kid, never trust a fink. And I can understand why in this case. Here's a man just a few years ago called a certain product every name in the book, wouldn't touch it with a 100-foot pole. It's criminal. Nothing changed in the technology. It's not like they reworked it and made it better. There's nothing different now in Bitcoin, and I call it Bitcoin, than it was 5 years ago. But suddenly, not only does he think it's great, but now he thinks it should replace gold as a capital structure for companies. Why? Because the company he runs stands to make tens, hundreds of, maybe even $1 billion or more involved with it and all. And I think it's terrible. But why I call him, and I did, a scoundrel, like I call Max Kaiser and Saylor, is Saylor and Kaiser violate the very first principle of investing. And they have stated for years to tell all the people that listen to them, sell everything you own. Saylor must have said that a dozen times on CNBC. Sell your stocks, your bonds, your real estate, everything. Borrow if you have to. And don't even put it across the cryptocurrency world. Just put it into Bitcoin. That violates every rule, including rule number one you learn as a financial advisor. You never put everybody's stuff in one thing, no matter how much you like it, even gold. And yet there they are. So I'm very troubled by that, especially when you see that they're trying to attack something that for a couple thousand years, even though we know, I always tell people Wall Street is going to treat gold like kryptonite. And this is perfect example of this. For those that know that I've said this for years, anything that's managed for a couple thousand years in any of that time to buy me food and clothing and shelter, no matter what happened to inflation, the currency, what have you, that is a proper capital structure investment product to have. And the volatility in Bitcoin, anybody that's a trust officer, fiduciary, looking to have safety of principle for their clients, how could you possibly look at something that's this volatile at this point in time, other than a total risk speculation like anything else would be deserving of? And yet they speak about it as nirvana. So Larry Fink, I won't get to that cursing part, but let's just say he and I see things differently.
Yeah, and it's kind of interesting because when you really think about it, a lot of the people that are invested in crypto and Bitcoin, et cetera, you could make the argument that had it not been for crypto, these would be gold buyers, these would be silver buyers, these would be precious metals buyers. So you effectively taken out all that capital from, from a tangible market and place it into an intangible market. So
Well,
I just find that very interesting.
the other thing to say about it is, and they don't like this, but it's the God's honest truth in my book anyway. It's a cult. It's not an investment group. It's not a fan club. It's a cult. In fact, there isn't an ounce of willingness to hear anything other than Bitcoin, Bitcoin, Bitcoin. And no one should ever in the investment world 2,000 years ago, or if there's still a world 1,000 years from now, ever say that any one thing needs to be owned and nothing else. There is a reason for diversification. There is a reason to have gold. There is a reason to have stocks. There is a reason to have bonds for most people, that type, etc. And as far as this cult that has come across, it's Bitcoin or you're dead. And we're just starting to see, I was just telling you that, we just saw a few days ago, this company came across all the Bitcoiners plugged it, that somehow they were going to, this gold mining company was going to buy all this Bitcoin. And that was the reason Bitcoin went up the other day. Well, it collapsed today, that story. It proved the CEO claimed and resigned and said he didn't even know that the company was doing that. But these are the type of schemes and things that happen in the highest frothy part of when there's been something highly speculative. And that's what Bitcoin is. But my opinion on it has been that it will not top out until they have the halving. Now, this halving is supposed to happen sometime in April, but after that, there's going to be very little for them to market on. And if they haven't gotten it to a substantially new high price by then, it's going to come down real hard, in my opinion, for the rest of the year.
Interesting. So let's go ahead and pivot over to gold. We started off this conversation talking about gold. Well, what do you see happening with gold now? It's gold is sitting at an all-time high. What's your prognosis on gold?
Well, it's been my most favorite investment. I made a very, peculiar decision in the end of 2021. I felt, and I said it was just for me. I didn't, our planning group people weren't encouraged to follow it exactly or even close as I did. But I felt that gold was going to outperform stocks and bonds for at least the next 3 years. So 22, 23, and 24. And I didn't want to own any equities or bonds other than things that were related to natural resources. And gold, believe it or not, if you go look at January 1st, 2022, it's outperformed the Dow, it's outperformed the NASDAQ, and it outperformed the bond market by a lot. And while I don't think it has as much pace to go higher as fast as we managed in these last few years, my target from when it was 1,300 was 2,500. I think 2,500 is very reasonable. And if some of these things that are starting to occur now and the cracks that we're seeing geopolitically, uh, monetarily wise, and of course, social and political, then I could start looking at a much higher number. But at 2,500, not only will we have made a lot of money from where we bought it, but I think finally the things related to it, and particularly mining shares, which had a horrific bear market, and I had my head handed to me. So I put on my pant legs one leg at a time like everybody else. But even now, we're seeing that turn now beginning. We actually saw in the last couple of days gold shares outperforming, even though gold was up, gold shares went up even more. And that real bear market, as bad as it was, actually set up for a much stronger bull market because how bad it was. Because basically everybody that needed or had to be washed out got washed out. So there shouldn't be much overhang in that market now when we start to make higher highs.
So yeah, the gold miners haven't really kept pace with the gold price itself. I've talked to Rick Rule about this before, and he basically makes the point that a very small percentage of the mining space is actually being held up by these small number of companies. So the vast majority of companies in the mining space are, the penny dreadfuls, as he likes to put it. Is that also your view as well?
Yeah, so there's certainly more producing mines in gold and silver than there is uranium. That was always the uniqueness about the uranium. There was only a handful of producers, and everybody else was a speculation, hoping to develop something and all. I do think that one of the things, especially when we get away from gold and we start to look at more, even though gold is used industrial wise, when we start to look to the base metals, and especially copper now, I think a near perfect storm, because nothing's ever perfect. You can always still lose, but a near perfect storm has formed for copper now. The long-term story that everybody believed a year ago is still solid. It might have come off a notch or two because it's not going to come as fast and maybe as effective, this greening, as we first thought a couple of years ago. But what's really changed for the better is the current supply that many people thought was actually going to be surplus this year now looks like it's going to be a deficit. And that's really setting up the price. And realistically, we're going to need a $5 to $6 copper price before any major copper producer is going to go to most places in the world to sink $1 billion or more into a project, especially in areas of the world now where they can own it today and be gone tomorrow. So I just think that as good as I'm bullish on gold now, I think copper has as good a chance to make money and be involved in things in copper as gold has to offer.
Now, of course, Peter, you've heard the term Dr. Copper, which is, Dr. Copper is supposed to be indicative of the overall health of the economy. with looking at a higher copper price, does that also imply a better overall market as well?
Yeah, I just don't, what I think we used to happen before is by the time the economy peaked, we built up such large excess supplies of copper. And we don't have that now. And we're seeing record lows. We're even seeing smelters in China struggling to get product out. So I don't know if you necessarily have to have a real strong economy to get to make a lot of money in copper. I think what's been surprising to us for whatever reason is the economies have not gotten as weak as we have. And somebody that I just interviewed, this wasn't my thinking, but he obviously placed it in my mind, made an important note that in the last couple of weeks, 8 central banks actually cut interest rates and another 6 didn't raise them, including the Fed. And the Fed sound like it was dancing on getting close to where it may start cutting again. And that, of course, would be very bullish for the economy. So maybe we're not going to have, let's not forget that there were a lot of people in 2022 talking about no later than 2023, a very hard landing, which is yet to show up. Uh, my personal opinion is I think that enough liquidity has been put out there because we just keep printing these trillions of dollars that there won't be a hard landing. We could have a recession, but it'll be mild at best. So I don't think the fear of that Dr. Copper, or you don't buy copper as soon as you think the economy is going lower, has the same argument that it once had years ago.
Gotcha. What we saw in 2020 was the gold price shoot all the way up from, I believe, like 1,700 all the way up to 2,100 at one point. And that was kind of like a leading indicator for the inflationary wave that was to come a year later. Do you think that this current rise in the gold price that we've been seeing is that indicative of more inflation down the line? And so, that could also play a role in this frothiness in the market, so to speak.
Yeah, I think it plays a role, but I think the biggest role is the standout that we all are aware of, and we've been aware for some time, and that is the huge acquiring of physical gold by central banks.
Yeah.
I think another thing that's important, and as much it was a pain to watch, because many of us are given like the Comex, I have many others called the Crimex, and there's the paper tax and all this type of stuff. But I think the changing of where the physical market is being centered now has been a critical bullish development for gold. The London, New York markets just don't have the influence on the gold market that they once did. And Asia, as each day goes by, becomes more and more of a player there. And therefore, finally, true physical demand is playing a bigger role in the actual gold price than the paper market because it wasn't too long ago, those I remember, let's say in the 2000, after the peak in 11 through 16 and 17, when we would have a 30 or $50 down day on the gold Comex, Crimex, and it would take weeks or months to make up that loss. Now it's made up in hours, no longer than more than a few days. So it's clear that the paper market doesn't have the same negative impact that it once had. I think that's second to the fact that the physical market is so in demand because of central banks. And I do think that there's people that are buying it, but I also think that there's people buying it quietly, not so much in North America, but around the world because of geopolitical concerns. I think it's a big mistake. I don't think 10% of financial advisors in the US, that's all I can speak to. I don't talk to really any outside the US. I don't think any of them could ever really pass any strong geopolitical test right now. I don't think they understand what's happening in the world. I don't think they understand the impacts of what it can have. They certainly scoff at the idea of the BRICS. And I say to them, hold on, folks. Here's the simplest thing. No matter how big it gets, those countries used to deal with the United States. Now they purposely don't want to deal with the United States. How does that benefit the United States? And they always go, what time's lunch, guys? And
Yeah, normalcy bias.
yeah. So I think there's also a geopolitical factor in the gold price that has been positive.
Yeah. What about silver? Do you think we'll get to the point where you start seeing this capital flow into silver as well as the gold price kind of ramps up?
Yeah, I think only then. In my days of speaking at the gold conferences around the world, the silver bugs always got mad at me because I always called it a second-class citizen. It's improved because its industrial demand has improved, but it's still not at viewed by the key people yet as the same as gold. So I think it's going to take not only gold going up, but a clear movement of the public and institutional sector coming to this market. And then once it does, then it can, at some times lead. But I think it still has, I've heard, and there were a couple guys that were pretty good guys. I think they meant it. They're still around, but a lot of guys came and went that talked about 50, 100, $200 silver. I've heard that for decades. And my answer to when clients and friends ask me about it, I say, let's get to $30 first. Then let's start talking about those numbers.
Yeah, one step at a time. Well, be that as it may, whether it be gold mining, silver mining, even Bitcoin mining, you're going to need a ton of energy to get these things off the ground or off the electrical grid in terms of Bitcoin. There, you also have AI data centers as well coming into play. They're going to use up a lot of energy. So let's pivot over to energy for a bit. What's your overall prognosis on, let's say, oil?
So, one of the brightest minds I ever met, I interviewed him last night. I think he's personally the smartest person I have ever met that I got to know personally. A man named Michael Gentili I asked him the same question because that was his expertise years ago. And he made a very good point. He says the oil and gas market, but oil in particular, has very bullish fundamentals. The one dragging part about it is the economy and the strength or lack of still impacts that market a lot. Uh, Not as much the copper, so to speak. And so I think the big mistake that the country's made, including this administration, let's not forget in the early days of this administration, they made decisions to take us from a net positive producer and ample energy supply to basically strangle and blame the oil companies for every fault of consumers having to spend more at a pump. And I'm certain that the oil companies got together and said, wait a minute, we're going to go risk billions of dollars to find new oil supply just so this guy can cut us off at the knees again. So I think one of the things is the lack of exploration compared to years ago and a much longer time frame to get to this so-called green energy level that the world wants to get to really bodes well that oil prices are going to stay far more consistently priced than drop to a lot lower than people had first thought a year or so ago. And with that, uh, feed into the inflation and other arguments. So I wouldn't run out. I feel more comfortable in the mining sector right now, but I wouldn't be against holding anything that was oil related. I think natural gas has more of a challenge, quite frankly. But oil, I think I would own an oil stock before I'd own a technology stock right now.
Gotcha. Gotcha. Speaking of mining, what about uranium? Uranium is sitting at $89 at the moment. It, as you recall, shot all the way up to $110 plus. A couple of months ago, it's been kind of in a correction since then. What's your overall view of the uranium market?
So I lost some friends on this, but I'll share it anyway. Uh, I got involved in uranium a few years back when it was hovering on either side of $20. I never played it really before in any way from my money management days all the way up until then. And I got involved in a big way. And I really got involved because of another guy who I heard present and saw this turn in this energy needs. And it sounded great to me and I got involved. But I looked around and I saw that uniqueness, what I think I mentioned earlier in our interview. There was only a handful of producers. I mean, just a handful of public ways of owning it, and everybody else was hoping to find it or might have found some, but hopes to find enough that they can have their own mine and all. So when I decided to go long in a big way, I decided to go long only in the major producers, and then of course the ways that came along of having physical exposure through Sprott and other ways. And I stayed that way until late January. And by then, everything that was owned had a triple digit gain in it, some as high as 400 or 500%. At the same time, 2 years ago, proving I am human like the next person, I put a lot of money into gold and copper juniors, and they were down 60, 70% from their highs. So my feeling was that done real good in the uranium, it can still go higher. But the thing that really scared me off, and I think this is an important point and it plays into my concerns about Bitcoin. If you remember in January, late January, there suddenly was this great euphoria that swept the uranium. Everywhere I looked, everybody and his mother suddenly was talking about uranium going up and rocket ships and all that type of stuff. And I just felt at that point to take these big gains, put it into things that have gone much lower instead of higher, and that they offered less risk of loss of principal. I've had too many paper gains over my 40-year career disappear. So that was the main reason. I still think the uranium story is as consistent now as it was a year ago. I just think the enthusiasm got ahead of the price. And it still has this issue that the other types of metals don't. There's too few producers. And why I bring that up and why I say this to people is it's great. And I know there's great stories and there's companies making discoveries, but by the time those companies get around to developing that, getting the permitting and all, the uranium move could be over by then. And I mean, it will be over by then. I think it's going to last 10 or 15 years. And therefore, I think the focus should be, if you are going to be bullish, is continuing to be overweighted in the producers and the people that own the physical product. And this pure exploration ones have to be the smaller part of the portfolio. And people have it reversed. They've loaded up on the most highest speculative ones, and they have very little of the physical or the producer ones.
Yeah, that's a really good point. A lot of these mining companies aren't going to make it into production up until like probably the late 2020s or early 2030s. So I mean, you're going to that's a long time to wait for a return right there. Whereas with gold or with even oil, I mean, a lot of these gold and silver miners, I mean, they already have mined in production,
Right.
right? So interesting point there. I hope this. Yeah, I hope it didn't create any more additional enemies for you there, Peter.
No, it's not
That
enemies. No,
question. I'm,
no,
I'm
what
just joking
happens
around.
is no, what happens is obviously when I was very bullish on it, people would take my quotes and they'd be floated. Now, of course, when it did decline, some people that think that somehow I'm the reason for it declining was silly. I don't ever want to be at such a level where I would move markets, anything like that, which I certainly don't believe I did. But I think that was just another reason people got too much involved in it. And one thing, if I can just say, if you don't mind, one negative of the internet and Twitter and all these things that didn't exist like they do 20 or 30 years ago, it shrunk people's waiting time for things to develop. And you can just see it like, hey, I got in Monday, it's Wednesday. What happened? I thought there was, investing almost always takes twice to three times as longer to be successful, a company, whatever it is, than you originally thought. It's just a good rule to have that. And declines happen much faster and go further down than we could ever imagine. And I learned that in the last 2 years. It was the first time I was ever on the wrong side in a big way in a bear market. And even after being a so-called expert for almost 40 years, I'm still learning. So I think those are things that happen. And I think that's what happened with uranium. People's projections and hopes got way ahead of the reality. And I think the price and all is coming back into more of a conducive place where there's more reasonable chance to look at these things again.
Yeah, I mean, adding to your point there, even I get accused of moving markets at times. Just and so like it, the internet's going to speak and they're going to speak regardless. So it's just the way it is. So let's go ahead and move over to coal. Are you a big proponent of coal in terms of an investment?
Yeah, I don't follow it, and so I wouldn't, have a worthy opinion to comment on it. I really don't look at it, so I'd have to pass any comment on that.
Gotcha. So with gold, I want to go back to gold for a second now. So with gold making its rapid descent up, is this kind of a bearish sign for society? Because you typically often hear the adage that, you buy gold and you pray that it never goes up. How true is that? And is the fact that gold is moving up now, is that an ominous sign?
So let me tell you, as I used to explain as a money manager, a fund manager, and still as part of a financial planning group. You're right. The comment that I used to say to people is, I want you to buy gold and hope it doesn't go up. And somebody would look at me, Mr. Grandich, why would you want me to buy something if you're hoping it doesn't go up? Because what little you're going to buy, if it goes up a lot, I can tell you what mostly you have is going to go down. Okay. And so you're right. Gold should always have been, and still for most, just an insurance policy. Just like we have car insurance, we have home insurance. Most of us don't want our cars or homes to burn, but if they do, we want something to offset it. But I think gold also became, and why I got so involved in it and felt that in 2022 you could actually own it as an investment past just insurance, is because there's such bullish scenario for it. The inevitable currency implosions occur. One thing history has taught us, no currencies ever last forever or close to ever. But gold somehow has managed to last for thousands of years. Now, of course, if you were a crypto nut, I call them crypto nuts, they would be pulling out their hairs right now here and calling this me. And I get called everything from a dinosaur to a guy that belongs in a nursing home. I mean, I get these things from these crypto people, and they can't understand that how historically gold has performed. And central banks are not buying Bitcoin. This is why I keep saying to them, they're not. Now, you could have financial guys that are trying to create a market for it because they want to make money selling it, but wanting to make money selling it versus basing your whole system on it is not coming close. In fact, most major countries are going to implement digital currencies. And with digital currencies, especially, Bitcoin is not an ally to governments because they can say whatever they want and try to legitimize it and make it like it's the girl next door with apple pie and a flag. But it's still a place where a lot of people use it to do underhanded things and also keep from reporting to governments and all. And to try to overnight legitimize it versus something that for a few thousand years has worked and always has protected. And now you want to attack. That's what irked me so much about this Fink comments. Something that's proven to be stable and all. And he's supposed to be the world leader of a major financial institution. And how could you turn to people now and say, you don't want to own gold just because it worked for a few thousand years? We got this new kid on the block. That's the guy you got to go with. No, I don't think so. Let me go with the old man. I'll stick with the old man. Thank you.
Yeah. Yeah, I mean, it is truly insane, especially with given BlackRock's essential gobbling up of everything, and they have the gall to even say that gold is an impediment on the capital
I'll tell
markets.
you when I'll change my mind, and I'll come on your show and admit that I changed my mind. When Larry Fink and BlackRock announces that they're no longer taking their payments in cash, but everything they're taking it in Bitcoin, including this 40 million or 80 million, whatever he's getting a year, that he's decided to take it all in Bitcoin. When he does that, I'll rethink my Bitcoin. Until that time, I'll stick with my thought.
Yeah, excellent. Well, hey, before we close out, I want to ask you kind of like a general investor question. When you go in to buy something or to sell an asset, how do you determine if something's a buy? How do you determine if something is ready to sell? Like, what's sort of like your methodology there?
I never been a technical analyst, and there are people that basically live off it. But one thing I've learned about technical analysis is it can start to signal when something is having much more difficult to continue running. And so one of the first clues for me is when something that I invested for fundamental reasons is now sending out some negative or potentially negative warning signals from a technical viewpoint. Gold has not done that. Gold has just kept making a series of higher lows. It traded in something that we all saw for 10 years. We all felt it was going to, well, those that were bullish, was going to break out to the upside, which it did, a cup and handle. And every chart you look at now, other than if you look maybe at a very hourly chart and say it may be a little overbought if you're trading just for hours or days, but there's nothing yet on that horizon to suggest that. There is obviously in the stock market concerns, overextension, lack of breadth, percentage of outright bears has shrunk dramatically, insider selling. There's a lot of still indicators, but let me leave you with this because this is something that's not often spoken about. So give me 2 minutes to share it because I think it's very, very valuable. It's one of the things I still speak to the public about to make sure. The market that I entered in 40 years ago and the market that's today is 100% different, not 99% different. First of all, the New York Stock Exchange, the American Stock Exchange were the only stock markets in 1984 when I entered. We still see some networks shooting from the New York Stock Exchange, but that might as well be a museum. Most of the trading doesn't take place there. 90% of the trading in 1985 was retail investors. Now 90% is institutional. Half of all the money in the market, somewhere's on either half, is in what we call non-active type of funds and indexes. They're tracing an index, a fund. There's not a manager buying and selling individual stocks day in and day out. The remaining half, 75% of it, if not more, is in some computer-driven type of program. It may be simply algorithms that are following words that are in headlines and they'll buy or sell, or it may be very complicated using options and futures and stocks. Small percentage is buying stocks because we want to be part owner of that business. And maybe they're going to sell more widgets, or maybe they're going to offer a better service. And with that, the price of the stock should go up and I should make money in it. That's the huge change that some of us older people with still gray hair or no hair have not adjusted to what the market is now. They still think it what it was 30 or 40 years ago. I think that's very, very critical for people to comprehend that. So even that when we're looking at individual stocks, the vast majority of people are no longer buying them to be part owners of the business. In fact, half of them don't even know the name of the president or even what the company does. It's just a part of a mathematical or a rhythmic part of a program that makes up the decision to buy or sell. It's not because of what they do or how good their productivity is or how good sales are. None of that. And I think that's something that a lot of people have not adjusted to. And it took me a while to adjust to that because I'm not technology driven. I'm not big into all technology. I still rather have a yellow pad and a pen than a big computer to sit down with people and try to talk and show them something. I guess I am that relic or dinosaur that the Kryptonites call me after all.
Hey, well, I mean, the pendulum swings both ways. You know, we could be very well due for a pendulum swing the other way. And to your point there, I've looked up this stat before. The average holding time of a stock today is like 6 months. If you rewind all the way back to the 1970s, you're looking at years, like 5 to 10 years for the
How
average
about
holding time.
the average research report? I would say through the 90s at least, maybe into the early 2000s, always had a 3 to 5 year outlook. Find me anything where they're talking past a year.
Yep.
You won't.
Everything is on an instant gratification basis, which is
Well,
a reflection of just
we
the
used to
society as a whole.
what we used to be happy making in a few years, people expect to make in a few weeks or no longer than a few months. I think that's the other thing that people are going to need to readjust and look at. And let's also say this is another point. The amount of people who are even able to play the market is shrinking. The amount of people in America, 65% are working paycheck to paycheck. I doubt very much they have a lot of discretionary income to be playing the stock market and all. So the market is being more driven by the upper echelon or the closer to the top of the pyramid. And they look at it different than what the people down at the bottom of it or in the middle of that pyramid. And that's why it's even more of a challenge now because the information world has certainly benefited the people that have lots of money.
Yeah, we can't argue with that. Well, hey, Peter, let's go ahead and end it on that somber note. But where can people go ahead and find you?
Well, I do have a blog, petergrandich.com website, but mostly on Twitter. That's where I spend time. And there's also a YouTube channel where I post the interviews like you've been gracious enough to have me on. And also from time to time, I interview some people as well.
Excellent. Well, there you go, guys. Check out Peter, check out his YouTube channel, check out his website, and also like this video, comment down below, and subscribe to the channel if you enjoyed this content. Any little bit helps. It goes a long way, and I'd really appreciate it. All right, guys, I will see you in the next episode. Bye, y'all.